Welcome to Wall Street Confidential. The big employment number is out, 6.5% unemployment. We lost another 250,000 jobs last month. Jim, a lot of people are buying, not on the news so much, but of course we've had a 10% loss in the last 2 days.
I mean, the process here has been, we went down 20 and then we found 8,100 and then we went up big to 9,600, up 20. Now we've chested down 1,000, and down 1,000 is going to bring out buyers. Whoever was trying to break the market yesterday seems to have disappeared, and when the market goes up, the redemptions are less. So it becomes very self-fulfilling. I've been reading a lot of Doug Cass today. I agree with him that it's easy to take some stocks. Floor reported a good quarter, so why not go take Foster Wheeler, which I own, fractionalordsplus.com. Qualcomm reported a miserable quarter, gave horrible outlook, and the stock is up. So, so why not go back to Cisco, which also reported a horrible quarter? I think that what you want to look with this market is that it's all emotion and it's all futures. And if the futures are up, then on a given day, then you're going to be up. And then, of course, by the end of the day, you have to go because when the futures are down, you're going to be down. This is no way to invest. It's only the way to trade. But in the 1990, 1991 bear market, we often were up on Fridays as the short sellers rang the register. That seems to be the case today, too. The fundamentals are awful. The employment number, someone says, is better than expected. Look, we're going toward double-digit unemployment. We're just inexorably headed there. So there's nothing good. But the bad right now, people believe, was reflected in yesterday. So if anything good happens, they want to be in. This is fatuous reasoning and logic and anti-empirical and certainly not rigorous, but it's working.
And I want to reaffirm your strategy, Jim, which I think is a solid one. You want high-quality stocks, a lot of cash on the books, little debt. What about the buyback situation? If you're seeing management buy back,
they're only good if the stock is if they weren't buying higher, the stocks are so low that it's unlikely that they'll issue equity. There's too often that we're seeing situations where they bought a lot of stock and then they're issuing equity. That's just the banks did that. But take a Foster Wheeler, didn't buy at 80, didn't buy at 70, didn't buy at 60, didn't buy at 50, didn't buy at 40, didn't buy at 30. In the 20s, it started buying. But of course, then Wall Street downgrades Foster Wheeler yesterday. So there's a lot of counterintuitive things happening for Nushin. What I know is when you're down 1,000 points, you get a little bounce.
Yeah, all right, that's definitely true. Thank you very much, Jim, for that analysis. I'll remind viewers, in case you missed our conference in October on 2009 money-making strategies, we do have a DVD that's coming out. You want to check it out. Email conference@thestreet.com.